Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
All right, everybody, welcome to episode 807 of Freed on Business. I want to remind everybody that we're streaming live on LinkedIn, YouTube, Facebook, Twitch, and Instagram. You can look for us at Jim Freed or at Freed on Business. And today we're going to talk about the residential mortgage market with our good friend, Ed Cairo. I want to, first of all, thank our friends at Warren Henry. Warren Henry's been a sponsor of the show for 12 or 13 years at this point. So thank you to Eric, Larry, Ismet, and the rest of the team over at Warren Henry, of course, Warren. And now back to our guest, Ed Cairo. Eddie, how are you, man?
Hello there, Jim. How are you?
I'm doing great. So Ed, thanks for joining us today. Recently it came out in the Wall Street Journal that last year was the lowest volume for sales of units of residential property in years. When they do sell, a lot of them are going for all cash. Most people that are living in their homes today don't want to give up on their house or their low leverage financing, so they're staying put. I know there's a couple different ways that people can capitalize on this. Either they can do a reverse mortgage if they're a certain age and have certain circumstances, or they can do a HELOC. And Ed, I know that you and I are working on a number of both of those. I don't really do them alone, folks. I do them with my friend, my expert, Ed Cairo. So Ed, welcome to the show. Why don't we start by talking about, the type of rates that are out there and where you see rates at today as opposed to last year?
Well, on a regular 30-year fixed loan today, depending on their credit and the loan to value, et cetera, the rates are in the high sixes, I would say, and in some cases in the sevens. And, the average rate over the last 50 years has been 7 3/4. So we're probably about where it has been historically. The twos and threes were something that happened a couple of years ago. A lot of people have that in their minds, but the average rate over the last 50 years is right around 7 3/4.
So let's just talk about the last 12 months. Mm-hmm. Rates have gone up 100 basis points or 1% in the last 12 months. So I think the people that waited for the rates to come back to where they were recently really have been somewhat disappointed. Are you starting to see people coming off the sidelines now? Yes.
I have to say over the last, I would say, couple of months, at least 2 to 3, we're getting a lot more phone calls, a lot more purchase business. I think people are realizing that depending on their personal situation, there's times that they have to buy a home and they'd like to buy a home and they want to secure their asset, and they want to put their family in a position where they're not moving every 2 years. The landlord's not raising their rents and all this good stuff. So, there's a point where, you, as a family, there's a time when you need to buy a property or want to buy a property anyway.
Well, it sounds like a person wants to control their own destiny. Now's the time to get off the sidelines.
Yeah.
Are you seeing any changes in structures? Are people going for longer fixed rate deals? Are they going with, ARMs? Are they going, what structures are you seeing most popular today?
No, the ARMs aren't really priced that well, and it's really not worth the effort to even work with an ARM at this point. The 30-year fixed and the 15, I see a lot of people with 15-year loans. The rates are a little bit better. They're paying off the house faster. The equity position grows enormously on a 15 as opposed to a 30. But, that all depends on their personal cash flow. That's why you have to look at each individual person or family and, make sure that for them that, you point out whether they can afford to do that or not. But, those are pretty hefty choices nowadays, the 15 years. They're priced pretty well.
It used to be that there was something we called the luxury market. Today, I think virtually every house or condo is a luxury one compared to just a few years ago. Yep. With we're not going to talk about that particular issue today, but I'm sure that the luxury market continues to go strong. People continue to buy with all cash. A lot of people have a lot of equity built up either realistically or artificially in their homes. And earlier in the show, we talked about a couple of ways people are tapping it. We talked about the reverse mortgage for people that are, I think it's over 62, right, Ed?
Mm-hmm. Yep, over 62 years old.
And then there's also the HELOCs. So, I know that we're working with a couple of very high-profile, high net worth individuals that have incredible loans on their house, have seen very, very significant run-up in the equity and are looking to tap that equity for a variety of reasons. Each one has their own personal reasons. What's the structure that people can expect on a HELOC today? How much is the maximum amount of proceeds they can get? What types of rates are they looking at? And, let's go from there.
Well, the rates on when you talk about a HELOC, a home equity line of credit, is basically what they're doing, and people are tapping into the equity that they've had on their homes, and the lenders will lend up to 80% in most cases. I mean, some are different, but for the most part, that's what it is. 80% of the value of the house. House is 100,000. They'll give you 80,000, so on and so forth. As an example. If you have a first mortgage, you'll subtract that from there, and then you'll get the difference. The thing about an equity line, which is very nice, is that you tap into the equity in your property, and the rates are probably in the 8s or 9s, depending again on your credit and the loan to value, et cetera. But you have a line of credit that you can use for an emergency, for a vacation, to pay your income tax, whatever the case may be. There are some people that need to come up with some money, and with the stock market of late starting to decrease a little bit, they may not want to start cashing out there. There's a lot of reasons why people would want to tap into the equity of the property. But the nice thing is they have a line of credit to use, and it's almost like a checkbook, and they can write a check out of that line, and they would just pay on what they use. So it gives people a little bit flexibility with their financial situation if needed.
Well, also the rates are materially lower than what they would get on a short-term loan from their bank, which is probably in the 10 to 12 range, or off their credit cards, which can be in the mid to upper 20s.
25, no kidding.
And it also helps them to rebuild and maintain their credit position as well when they're doing their credit scoring. Now, Ed, we talked a little bit about the. Everybody wants to talk to me when I'm talking about this interest rate stuff. We talked a little bit about reverse mortgages. It's a product now that a lot of high net worth investors that have seen a big run up in their home value, they're able to tap that out. People that have historically been making loan payments. We had one person that was looking to do a settlement against their divorce and pull out a lot of cash that way. That was, and in both cases, the interest paid on these loans is tax deferred or tax deductible, right?
Absolutely, sure it is. Yeah, absolutely. And there's another thing. If you're over 62, and depends, they'll give you a certain amount of money based on your age. As you go up, they'll give you a little bit more money out of the equity. But what'll happen possibly in a retirement situation, the principal and interest portion of your payment will go away. You'll never have to pay that again. And if there's enough equity in the property, you get a line of credit similar to an equity line that you can utilize. And the nice thing about that is you'll never pay a payment on that either. So if you go on vacation or you buy a car, whatever, you're never really paying a payment. Now, those payments, what'll happen is it's not like a forward loan, it's a reverse loan. So it'll add up against the equity of the property down the road, but it's what they call a non-recourse loan. So if it ever went upside down, let's say the economy, went sideways, you or your heirs would never have to pay the difference, right? The lender would cover that difference. It's a non-recourse loan, which is very nice,
Wow, that's actually a great way to help your kids help you in retirement without ever having to really do it. It sounds to me like the time to act is now. With the upward sloping treasury curve, the anticipation by the smart people on Wall Street is the rates are going to continue to go up. Mm-hmm. We don't need to talk about a political situation, but I think everybody realizes that Social Security is the biggest. Social Security and those types of payments, Medicare, Medicaid, are the biggest part of the federal budget, and it'll be difficult to really impact that in any way. So, I think that's why they think rates are going to go up. So, And then, of course, if we have inflation, rates will go up again. The Fed recently said they're not going to be lowering them anytime soon. So, Ed, how easy is it right now for people to get a loan, to process a loan, the mechanics of getting a loan? I mean, what is that?
It's not that difficult, and it all comes down to, if let's say it's time for them that they feel they want to buy a house. There's a couple of factors they have to look at. One being their income, stable income, enough income to qualify, etc. The other one is credit. Do you have good credit? Do you not have good credit? Do you owe a lot on your debt? So those are things that, your debt needs to be within reason. You have to have some down payment money. Did you save any money? Do you have down payment? Do you have reserve money just in case the AC goes down or whatever the case may be? So there's certain factors that people need to look at, whether it's time to buy or maybe they have to wait a little bit. But if it is time to buy and they have the income and the credit and all that, it's not that difficult to get a loan. They can get a loan no different than they did 5 years ago.
So, Ed, what's the minimum amount of equity people need to put into one of these deals? I mean, it's make believe it's going to be a conforming loan that gets the best rates, that gets the best term. How much is the maximum amount that somebody can buy today from borrow from Fannie or Freddie conforming loan today?
700 and change. I'm gonna have to look, but somewhere in there nowadays. And the minimum down payment is 3%. FHA would be 3.5%. So basically, I mean, if you think about it, you don't have to have a ton of money to put down. And also, there's a lot of programs out there that are helping assistance. Through the county, through the cities that are giving these assistance programs that are helping people with down payment assistance and so on and so forth. So that alone, would help people get in properties. But the most important thing, in my opinion, would be keeping your credit scores as high as you can and keeping your debt as low as possible and having some money on the side in case something happens. Because you don't want to get in this position where everything you have goes into this house and now all of a sudden you can't afford to fix something.
Sounds like for $40,000 or $50,000, I can get into almost $1 million property these days.
Yeah, basically, sure. Yeah, if you have the credit and you have the income, and it all has to do with cash flow. I mean, how much are you making? How much are you cash flowing? I mean, are you comfortable let's face it, if you're either going to buy a home and pay a mortgage for the most part, or you're going to pay a landlord. If you buy a mortgage, your 30-year fixed payment remains fixed for the next 30 years. If you are paying a landlord, he, and I'm a landlord myself, can increase, your payment anytime they really feel like doing that as the market starts to go up. So you never really have any stability in that way. And plus, whatever you're paying the landlord doesn't come back to you in the form of equity, which if you own a property, it's the equity you can eventually build up into your net wealth.
Well, Ed, stick with me. We're going to go to a quick break, and then we're going to come right back and get the bottom line, the last word with Ed Cairo. Mr. Mendoza. I just love when Mr. Mendoza plays the bumper, he calls it, and we drive past the real estate deals that I've done. Thank you again, as always, Mr. Mendoza, for helping me feel terrific. You know who else makes me feel terrific is my friends at Warren Henry. I want to thank Eric Day, Larry Zinn, Ismet Yagzi, Warren Henry Zinn, all our friends over at Warren Henry who've been supporters of the show and our community through the show for 13 years now. I think maybe more. Can't thank them enough. They treat us like family. And you know what else? They'll treat you like family too. Whenever you're looking to buy or lease a car, you always want to get every advantage that you can. And that's why you have to trust and check out Warren Henry, the Land Rover, Range Rover, Infiniti, Jaguar, Lincoln up at 151st and Biscayne, Gainesville, the fancy Audi cars. They're gorgeous up there. They have Land Rover, Range Rover of South Dade and one in West Broward, both award-winning stores. And of course, down in the Keys, they have a store that sells all their nameplates, and they add more and more brands there, all the time. And what all these brands and nameplates and stores all have in common? Well, they come with the Warren Henry advantage. It's a bundle of services that Warren personally put together to make your car buying and car ownership experience possible and wonderful. I'm going to be taking one of my cars up to see Gerald, my service advisor, up at Warren Henry this weekend. He always has a loaner ready for me. I reserve it, and it's terrific. It makes it easy for me to go visit my mom while they're servicing my car on Saturday. So remember, join my beautiful wife, Vivian, my mom, lots and lots of my clients, my partners, my investors. We're all members of the Warren Henry family. You should be too. Always the best price, always the best service, always Warren Henry. Well, I want to remind everybody to reach out to me. Jim Freed, I'm the founder of Sandstone Realty Advisors. We help families across the globe. We have international families we work with. We also work with some of the biggest local families here in town to help them capitalize their real estate deals. If you need debt, if you need equity, if you need a special situation, or if you just want somebody who has an opinion, who's seen it before, that's when I go like this. I've got all the gray hair to prove that I've seen it before, because I have a forehead now too that shows I've been around. Reach out to me. Remember, whenever you reach out to me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
All right, we're back with my guest, Ed Cairo. Ed is the founder and chairman of American Home Finance. You need a special license to become what, since the big housing crash back in the day, has become more of a financial advisor for people. Home is their biggest asset that they have. Mr. Mendoza, push the button. There he is. So, with today, the house increasing in value and becoming more and more of a person's net worth, it's more important than ever to have somebody that's a financial advisor to your home situation. That's what Ed is. I introduce Ed to the people that reach out to me for their residential solutions. We're working on a number of actually high-profile, high-net-worth investors that are getting their HELOCs done. A number of them are working with me to help their families, their parents, pull cash out and travel the world and see their grandkids without burdening the current generation and making, tapping the equity that they've created or sat around and watched get create for them. But I think, Ed, you've already come up with the bottom line, which is, I think that it's time to act now, as rates are still at, I would say at the historic middle now, before they may even go up.
Yeah, that's right. They may even go up. And the other thing too is that, I think we've said it on past shows, the rates the way they are now, the housing demand is not quite as much as it was when the rates were a lot lower. So you tend to buy a house at a better price. Whereas as the rates go down, there's going to be more competition to buy the houses. It's going to cost you more money to purchase the home. And yet, yes, you'll have a lower interest rate. However, you're going to pay more for the house. That's just a fact. So if you're able to buy the house today and cash flow and it all works for you, if the rates do go down, once you've secured that asset, you can always refinance it and lower your payment. That's, to me, if you can lock in the asset, is to me, that's why you would buy a house now. That would be one of the big reasons.
And just to quickly go over it, a couple of things that people need is they need the best rates are for people that have credit scores over. This will be the lightning round, Ed. The credit score is over what? What's the baseline credit score to get the best rates?
I mean, top of the line is a 780 or above score. 750 or above is very similar. If you're over 700, you're going to be doing pretty well. If you're below that, it's not the end of the world, but they won't be quite as good.
Conforming loans, you can get them up to about $775,000 with.
No, actually 806,500. I just looked it up on the break. It went up.
Oh my God. Oh, that's great. And people can get in there for 3 or 4%. So for less than 50 grand with closing costs, you're pretty much getting into almost $1 million home or condo these days.
Yeah, absolutely. And they've raised the conforming limits, which they needed to because the prices had gone up. And, it keeps them out of the jumbo market. Jumbo is a whole different type of product, and it's a little more expensive and a little bit more money down. But if you're going to put down 3.5% or, 3%, I should say, somewhere in there, 5% down, 10% down, that's the way to go. Fannie and Freddie, would be, the way to go. Lock in the asset now. And if the rates do go down, and I say if, they probably at some point will. Hopefully, they won't go too much higher. But if they do, then you can always refinance it, lower your payment, and capitalize on the equity in your property.
And we talked about the. I'm sorry, I talked over.
No problem.
We talked about the HELOCs. The HELOCs are ways for people to lower their overall cost of capital, pay off their credit cards, pay off their car, and do it in a way that they get a tax write-off. Then I guess finally, one thing we didn't talk about is the fact that in order to qualify for a lot of these good loans, you need 2 years of increased income. And with the economy having been pretty good, I think most people now have had 2 years of increased income if they're 1099. So it seems to me like the time to get stability in your life and have financial flexibility is to get a loan. And if you need one, reach out to Ed and I, and we can help work you through this. You focus on what you do best and let Ed do what he does best. Ed, the email down there, I guess the website down there is in the corner of the video. And I want to thank you as always for joining us today on Freed on Business. I want to thank you. I want to thank your brothers for really helping my friends and clients get their residential, I've got to say it, houses in order, their house financing in order, and really making life easier for some of the more high maintenance type of people. Ed Cairo, thank you. And thanks to American Home Finance. I want to remind everybody they can contact me, Jim Freed, at Sandstone Realty Advisors. You can give me a call. You can give me an email. I can put you in touch with Ed. I can help you with getting a loan with Ed or doing your commercial real estate as well. If you missed something on today's episode, you can check out the replays on any of my social feeds, LinkedIn, Facebook, Twitch, or Instagram. Look for me at Jim Freed or at Freed on Business, or you can head on over to the at Jim Freed YouTube page. We're, of course, on Apple Podcasts, Spotify, anywhere you listen to your audio. Please check out all of our other past episodes. And again, I want to thank our friends at Warren Henry Automotive for being a sponsor for 13 years. Also a sponsor since the beginning for 15 years has been the Bergstrom Center for Real Estate Studies. We'll have them on again real soon, getting their real estate insights. And then we'll be going up to their conference in Orlando. Join me at the Center for Real Estate Studies Trends Conference in Orlando at the end of the month. And remember, everybody, the person who wants to do something finds a way. The other finds an excuse. Now go out there and make it happen just the way Ed Cairo and his team does. God bless you. God bless the United States of America. Mr. Mendoza, your time to shine.